All right, I've done what I can to be as thorough on YEXT in my technical analysis as I possibly can. Now you might see a lot going on the page. It's not really a ton. There are some important technical levels that I laid out. This is on the weekly time frame. So this is a bigger picture view. And then we can zoom in and you'll see how price reacts with these bigger picture levels that I've laid out. So start off the stock from when it was recorded. Obviously it didn't start on this date. It's been around for a while, but this is when it hit the exchanges and became a public company. They have a descending parallel channel here. This white line, descending parallel channel. Price breaks above, grabs liquidity, brings price back down. Price breaks below, buyers buy it up, price breaks above, you sell, price below, you buy, hits the midpoint, sells back down, and this is the marking point at the bottom of this parallel channel. It breaks out, and then when it breaks out, consolidates at the top, that's when we get our large breakout. So these breakouts typically happen in 5 waves based on Elliott wave theory. You can see 1, 2, 3 is a big wave, 4 an extended 5 wave. So this is big wave up. On the long term here, I have a large parallel channel that you can see kind of encompassing everything here. There's the top, there's the bottom. So the fact that we had 5 waves up, a massive impulse, that leaves us to a corrective phase. Corrective phases are usually zigzags, 335s, and ABCs, or zigzags, WXYs. I find this to be a corrective double zigzag. And I can show you here. Again, this is on the weekly, so this is big picture here. So we have our top. We have 1 wave down, 1, 2, 3. Y. 1, 2, 3. X. And 1, 2, 3. Y. Which this would mark the first of the larger Y. So this is the first one, first of the corrective move. 1, 2, 3. Then you can see 1, 2, 3 again. But since it's a double, we have a WXY within a larger WXY. That's going to give us our structure as we move through this. Price moves back up. WXY forms the second top. And how do we know that these are accurate? Well, projections will be nearly an exact match. So I'm going to show you how you could have shorted this entire move down. You could have shorted it and made money. Like, you would have been able to 10x your money basically on a short on this. At least 100% if there's no leverage. But options, you could have made 100% of your, or 1,000% of your money actually in an option contract on this. So we'll say here, for example, go to the price range, and stocks are very technically accurate. So we'll take this full range and we'll just slide this over the top of the X. That will give us our bottom projection for Y. This is beforehand. This is just going off of what's happened. Sorry, gotta close that off. This is just going off of what's happened right in this range. So we measured this move and we pasted it on the top of X, the exact amount. So then that'll project what the Y will be. And look how accurate that is. Down to 20 cents difference. Okay, so that's how we know we're likely in this corrective pattern. So if we take this pattern right here, we'll go over and we measure to that bottom there, well, then we could likely expect price, if this is the top, to go down to here. So it's not going to go down to negative $2. So that tells me this likely isn't the top right here. Where could the top be? The top is probably somewhere here. And that would bring price down to an ugly 6.14 cents. Painful scenario there, no doubt. But how have I calculated this stuff? Let's zoom in a little bit here. Well, this is clearly an accumulation phase. This is where big hands are trying to accumulate money or accumulate shares so that they can then mark the price up and short it on you. And there's a lot of technical lines. I'll just go through what these technical lines mean. This yellow line you see right here, that is a volume imbalance, BPR, fair value gap. When you have a candle that closes and the next candle doesn't close near it and there's just wicks in between. And you can see the whole way across there's just wicks. And you get meat right here, but we go and we project that across. That is hitting this point at 16.34. What's special about that point? Well, it's a times 4 projection of this low and this high, and you multiply that by 4. So that coincides perfectly with this times 4 projection. So I think price will move up to here. I think we'll have another point where price goes up to here. But there's some downside attractiveness that the stock wants. There's volume imbalances right here on the weekly. So price wants to grab that volume that's right there. Because anytime you see price gap like that on the wicks, it's when large hands, very wealthy businesses and firms are buying. And they're buying so much so quickly that the price can't catch up. There's just they're buying more shares than are even available to be bought. So then price glitches up and then price glitches down. So usually price will glitch up where price essentially glitches down. It's not glitching, it's just there's so many buy and sell orders that price can't be filled as quickly as it needs to be. And you can see this is a level of interest as we trend down, because now the trend is down. If we break this line right here, I believe price will continue to trend down. This is a volume of interest. I would probably buy this, and then if I was a short-term trader, and I would wait till it hits the middle point of this massive parallel channel. Price goes down to here, bounces up to here, comes back down, and then the next point of interest. Why is this the point of interest? Well, it's lower than this low. There's a fair value gap here. Again, fair value gap is where there's a meat of a candle, a wick of a candle high, a wick of a candle low, and there's no trades. So then if we take this low, there's a clear fair value gap. But what's more powerful than a fair value gap is a balanced price reaction, balanced price range, and that's right in here. So I think this is a level of interest as well. You could buy long on this and then expect it to maybe retest this point and then go back down. There's also a very, very important level of interest right here where there's another BPR. Wicks down, accumulating. This could essentially be like a bull flag and then price would go up again. So do I think price is going to go down to here? No, it would go bankrupt. So it's likely going to be a truncated Y right here. Why do I think that it's only going to hit that point? Well, if we measure a Fibonacci from this low to this high, usually retracements happen at this range, the 0.618, 0.786, or the 0.882. I think it's likely that we go back down to this area because the 0.882 is right here, along with this larger horizontal line, fair value gap, BPR that we have here. Well, it's not really a fair value. This would be the fair value gap, but this would be the BPR. So to keep things as simple as they can while offering some clear technical analysis, we'll likely have a truncated Y right here. And then we might wick down to here, but nothing more. And then this will become the double bottom for the stock. If it goes lower, it's bankrupt. If it goes below this W for any duration of time longer than 3 weeks, it's bankrupt, in my opinion. So that's the general analysis. You know that, okay, why is this going to be a top here? Because you've got a BPR. And then that BPR, stretch it across, price gets up into there, it has liquidity, and it brings it back down. Why did price then go up right here? Well, price went up because it hit the midpoint of our parallel channel. Midpoint of parallel channel touched, comes back up, hits the volume again where like there's a lot of buy orders, grabs liquidity, comes back down. Why did it bounce here? Well, this is the 50% Fibonacci from, I guess you wouldn't know it at that point because I went from this high to that low, but there's a lot of things that we could break down even more in this technical analysis, but I believe that this is going to be the top of this move based upon these evident gaps right here. There's a very important technical line there. So another thing that's interesting is this right here. I'll clean some things up here. Oh, there we go. This is a point of control. This is at what price was there the highest amount of volume? And if we go from the bottom point here over, what's interesting is that the highest amount of volume out of all of this movement, the highest amount of volume places the point of control right here. So there was more volume. This whole move, the most amount of volume came in right here. How? Well, you can kind of see the volume being really, really high right there. So then we might ask, why was there so much volume there? Well, I believe if we go to the daily, we'll be able to see that it had a really good earnings report, and it made 60% surprise on net earnings. But by going to the daily, we can see how price interacts with some of these levels even more so. Just be able to see how well price reacts on these important levels. But without you actually having access to this chart, it could be difficult. But I anticipate if price can hold here, it might just bounce back at that 50% Fibonacci, wick down to this point, and then it'll probably make another top right here. And this is where we'll see a truncated 5. So then the real X would actually be there. And then we're going to have a truncated, which means it's going to be shorter. And I believe it wants this. That's talk about an extreme volume imbalance. Why did price shoot up right there? Well, it was earnings report of 350 350% surprise. But in line with that is big hands knew ahead of time what this earnings report was likely going to be. So they're accumulating as much as they can in this range. Earnings report comes out, right? This is all accumulation. Earnings report comes out and price pops up through. So this is a very, very powerful neckline in the price action. But price doesn't like imbalances like this. This is a very huge imbalance on the daily, nearly half a cent. So price wants to fill this imbalance in fair value gap. So it's very, very likely that, especially with this extreme rejection that happened right here, rejections usually happen when everything is euphoric. 60% upside, tons of volume, wow, we're going to the moon. That's when you'll see the price react, and then it'll go down. Because they need to have, wow, we're going to the moon, in order to get the liquidity and everyone excited, so they buy, so that then they can short, so the big hands can short. So it seems most likely to me that price will have a truncated Y, and it'll retest this neckline right here, fill the fair value gap BPR, which coincides with the 0.882 Fibonacci, and this will enact a double bottom at this point. So, but before we go down to here, I think a lot of people are packing on shorts right here, and I think we're actually going to go higher one more time. Prepare for either direction, but in my opinion, I'm most prepared in expecting one move higher, because in reality, we've only had a 1-2 impulse of 3, and then it doesn't go down after 3, so we would need a 1-2 impulse of 3, 4, 5. And as I stated before, not only is this yellow line a very evident BPR, what it also has here is we take this low to the first point of resistance above the neckline, right? Because the neckline is right here. So the first point of resistance above the neckline there. And we don't take the meat of the low. We don't take the wick of the high or the wick of the low. We take the meat, because then that's going to give us the most accurate price. So 256. Hey Siri, 256 times 4.
256 times 4 is 1,024.
So 1,024. So I'll go bring this up to 1,024. Well, see on the daily it says that this is the high. 1,000. Yeah, on the daily it says we've already hit our high. But when we go back to the weekly and we do that same thing, we have a different result. I'll show you. This is why it's important to have technical analysis on all time frames. Meat of the low to meat of the high on the first rejection. Is that where we want it? Hey Siri, 238 times 4.
238 times 4 is 952.
So we could see 900. And that pretty much hits right on this point, which is another fair value gap BPR, that yellow line that I'm showing you right here. So then where was it? What was it, on the hourly that I calculated? Maybe it was on the 4 hour that I calculated that. Let's figure this out. low. Hey Siri, 270 times 4. Is that 1080?
270 times 4 is 1080.
So then it's 1080. I want to find where I calculated. It might have been from this low. I need to be able to recreate that. Was it on the hourly? It could have been on the hourly time frame. Let's find out. It's pretty much just a wick at that point. So there to then this high. Hey Siri, 273 times 4.
273 times 4 is 1092.
Yeah, there's a lot going on right here. It's possible that this was the top, but it would make more sense to me if we liquidate some more people on the way back up, because you can see all the projections. It could have been I'm forgetting which time frame it was when I calculated the low from here to the high here, showing that it would go up to this point. But we'll zoom back out to the daily. Overall, truncated Y, meeting with the 0.882 low. We could have one more move back up to liquidate the shorts that are coming in right now and to grab further liquidity at an evident BPR, fair value gap. This is a very important line right here. So, and honestly, we could even see this extended out very painfully, and it would only be able to get to X by this point. And then we track back down and make a nice double bottom. But high side of price, if I were to buy right now, which I'm not, if I were to buy right now this stock, I would wait to see a reaction off of this line right here, because we're back underneath the larger parallel channel. This is the parallel channel, dotted line, center of the parallel channel. We're underneath of it, so it's bearish. This is where price moves down, but this is where you accumulate. You sell anything above the midpoint of the parallel channel, you buy anything below. So when price reaches this point, we could have a reaction back up, and then I would definitely be shorting at this point. I'd be buying at these points with risk management. Could it continue down and grab liquidity here? Yes, it could, and then it would just bounce back up. But overall, upside, price is likely going to go no higher than this before we hit this. If we hit this, then price can continue going up. But if we actually don't reach this point here and we hit this point first, well, then that's really bullish, because then price is gathering all the liquidity that it needs to on the low end before even testing those newer highs. And why is this a newer high test? Because it's above this high, and this high, and there's a clear BPR and volume imbalance right there between these candles. So if it tests this, then it's grabbing liquidity to take price back down. But if we don't hit this point here, but instead hit this first, well, then there's going to be that much more volume to bring price back up. and punch it right through. So, yep, price hits the X, then goes down to the Y, then takes off. If price goes to the Y here, before it hitting the X, price is going to power right through it, break through the X, break through the parallel channel, and then what would be the upside projection? The upside projection would be this low to this high, which would be, multiply that by 4 would be 4,096. We'll just do 92. It's conservative. So we'll lock that. So that's where price could go to. If this plays out and it goes to the Y first, price could go up to here. Yep. Long-term upside, if the stock does well, $45 after we make this W and this Y double bottom. That's all. If you have any questions, feel free to text them to me. I can go into significantly more detail on how this stuff works. I'll show you. We'll zoom in on a 5-minute and we'll see just how accurate these yellow lines are for price. I'll show you. Price rejects, accumulates, goes above, rejects, accumulates, goes above, continues above. Price collects right here. Once it breaks down below it again, that's where it goes way below. Price goes back up, hits this point, rejects, wicks above, grabs more liquidity above here, then rejects back down. Price retests on impulse, rejects back down. Head and shoulders, left shoulder, head, right shoulder. That's a very evident reversal pattern. We're going to see a big correction at this point, and that's exactly what we see. A very significant rejection at that point. Price hit the 0.618 at that point right here, goes back up. Why does it stop at this point? Because we're hitting our fair value gap and the lows of the consequence encroachments right here. We hit that, left shoulder, head, right shoulder, rejects back down even lower. So the next point of interest would be right here. This is on the 5 minutes, so this is very, very granular. Okay, we have this trend line, this BPR that I was showing you earlier. Look how price reacts with it. It's incredibly accurate. Price dips below, big hands accumulate, mark price up within the range, it goes above, dips back down. These are literally perfected. Perfect tap back up. Perfect tap. So what is this right now? If price is tapping this lower line and going back up, big hands are distributing their money. Why? So that small weak hands can buy and they can drive price back down again. It's just how the game goes. So then price powers up through it. What do big hands do? They distribute. Goes back down. Distribute. Goes back down. Anything above this line is a distribution. So this is all distribution phase. And we are at the height of the distribution phase, because if we were to just simply create an upper trend line, again, this is on the 5 minute, very granular time frame here. Anything above this line is very distributive, a distribution phase. This is called a rising wedge. Price makes higher highs and higher lows. That's not a bull flag. A bull flag is price keeping relative lows and falling down at the top. Then that makes price go higher. This is an indication that buyers are getting tired and price will move back down. And it wants this as its first point. If it doesn't hit, if it continues, price wants this point. Last point that price would attack, 5.5. Let's zoom out to the month. Price wants. Look how serious that monthly rejection is right there. Price is gonna probably go down to here. That's all.